they're so deeply in debt because they've been borrowing from, let's say, IBM's treasury, and they've been buying back their stocks so their executives can parachute out with stock options. So the CEOs and the executives of these major corporations in America have been screwing everybody because they were borrowing money from the company to buy back the shares of their stock because the price of money was so cheap. And a lot of times we have people either talking about real estate or talking about crypto, or they're talking about stocks or trading. And I'm going to give you a little bit more of a macro view, a bigger picture on it. After 2008, what they call the GFC, the Great Financial Reset, or whatever they call it, they had to keep dropping bond prices lower and lower and lower, and it got near zero. So they call it zero bound. So in some countries in Europe, if you have $1 million, you put it in the bank, they charge you money for there's no interest in it. So that's why Rich Dad, Poor Dad came out in 1997. I said, savers are losers. The reason I said that was interest rates on your savings was going down. And they're printing more and more money on the macro level. And what happened is that these companies like the Fortune 500, they were borrowing cheap money to prop up their stocks. So they were buying back their stocks, which set the stock price higher. So when that bus driver said to me, he says, don't worry, I got out of stocks, I went into bonds. I said, I hope you like driving the Titanic, but you're going to go down with it, And he got so angry at me because he did all the right things that his financial planner told him to do. And in a normal economy, that was smart. Because when I was a kid, only gamblers were in the stock market. You get those Jim Records that wrote Currency Wars and all that. He says Jim and I are about the same vintage. The only people that were in the stock market were gamblers. Everybody else, back in my times in the 60s and 70s, were in bonds because they were really safe. So you could get that. And now it's like this. The problem is for that bus driver is this. If the bond prices go up again because they got too much inflation, and I'm not saying it's going to happen. It's either going to inflation or deflation. We don't know. I don't know. But let's say they raise the bond price, stock market crashes, okay? Because the companies like Ford Motor Company, IBM, and those guys, the price of their debt goes higher. They're so deeply in debt because they've been borrowing from, let's say, IBM's treasury, and they've been buying back their stocks so their executives can parachute out with stock options. So the CEOs and the executives of these major corporations in America have been screwing everybody because they were borrowing money from the company to buy back the shares of their stock because the price of money was so cheap. But it drove the stock market to all-time highs. So today, of the S&P 500, sort of the benchmark of how good the economy is, of the S&P 500, 100 or 20% of the S&P 500 are zombies. In other words, their debt is so high because their stock price is high, but they kept borrowing money to prop up the stock market. So what you're looking at here is kind of a mini, micro, macro look at the world. So let's say they raise the bond price. Okay, so let's say they go from 1.5% to 3%. 100 companies crash. Of the Fortune 500, they crash because they can't make enough money to pay off the debt they borrowed. So their CEOs and executive vice presidents and all the investors can parachute out, screwing the stock people that invest in the stock market. That's why I don't own any stocks. I don't, because I'm an entrepreneur. I don't need to buy stocks because I can create my own assets. I create my own companies. I invest in private companies. These are public companies. So if you're understanding all that, there's public, private, there's stocks and bonds. So if they raise that up, this comes down. But guess what happens to bond prices if they raise the bond price? The bond price crashes. Because look at it this way, okay? Let's say I have a bond that's paying me 10%. Okay. And so they say, well, we need to goose the stock market. So they drop it to 5% interest. And so this bond goes up in value because it's paying 10%. So would you rather have a bond that pays you 10% or a bond that pays you 5%? I'll give you 4 hours to figure that one out, So they kept dropping it, and the price of the bonds kept going up because the interest rates were going down. At the same time, stock prices were going up. And now we're what they call near zero bound. How much more can they go? I don't know. I really don't know. Will they go lower? I don't know. Is there inflation or deflation? I don't know. But I'm just saying to you, that truck driver, that bus driver, if they raise interest rates on his bonds, not only does the stock market crash, but his bonds crash also. So he's following his financial advisor's advice, the reason they're called brokers, financial stock brokers, real estate brokers, is because they're broker than you are. They only make money if you sell you something. So they made a lot of money on that guy, trading him out of stocks and into bonds. They got commissions. But this guy is now skipper of the Titanic. And I don't know what's going to happen. I hope it all goes well for him. But if they raise bond prices, the value of his bonds crashes. So the reason I sit around and yak about gold, silver, crypto, Bitcoin, Ethereum, and all that is I simply don't trust the money markets or the stock market or the central bank. So that's why the Rich Dad Company was founded back in 1997 to educate people. Remember that we found out that quantitative easing doesn't mean they printed any money, but everybody, they printed money, so they expect stock prices to go higher and all that. So that's why I wrote my book, Capitalist Manifesto. And people say, why don't you invest in stocks? Because I don't have to. I'm an entrepreneur. I can create my own assets. I'm not saying you should do that. But with my rich dad, that's why I started, it was E, S, B, and I. My poor dad was an employee or self-employed or a small business owner. And then there's big business owner and there's inside investor. So I'm a big entrepreneur. I have over 500 employees, multiple companies, but I invest from the inside. So if I ever show, I'll show it to you later. But the thing is, nobody knows, sir.
Mm-hmm.
So that bus driver, my age, his financial planner says bonds are safe. And I'm quite sure the financial planner means that because that's what they're taught to sell you. But what is going to happen? Who knows? Who knows? This is the biggest bubble in world history. So it's either going to be the best of times or the worst of times. And that's what we think of listening to Rich Dad. We have cash flow games and books and all this. We have real teachers, like my advisors, like Ken McElroy is really in real estate. We have Tom Realwright, who is a real tax guy. He's in Garrett Sutton's in the law and all that stuff. We're real. But none of us are giving advice. I want you to understand the relationship, this is macro, between stocks or equities and bonds. So this is cash, this is debt. You see, so if I have $1 million, I would put it in a bond and hopefully get 16%. That's safe as, if it's a U.S. Treasury, it's guaranteed. But to keep the stock market going up, they kept reducing but that's the price of not knowing. And I tried to explain it to him. He got really angry. He says, are you a financial planner? I said, heavens no, I do have some self-respect, But that's why we have John McGregor, we have Andy Tanner as part of our advisors, because those guys are for real. They're in paper assets. So can I make a prediction? No. crypto is, Bitcoin is sucking the air out of gold and silver. And the Bitcoin guys are going nuts. They're happy as Larry. Okay. So two things are affecting the price of gold. One is interest rates went up and Bitcoin came in, Ethereum and all those other things. Which brings to my real rant. Here's the thing I'm really upset about is I'm talking to that poor bus driver, and then I was talking to one of these young, what they call them, hodlers or something, young guy, who now he thinks he's Donald Trump of crypto or something. And so when Bitcoin dropped from, I think it was 65 down to 50 for a coin, I bought more. And this Donald Trump of crypto is probably 22 years old, says, yeah, you made a mistake. You should have bought this. You should have bought that. You should have bought this. He started telling me about all these Doge coins or Kardashians. I had no idea what they're going to tell you. He says, Bitcoin's old. It's no. The kid's a gambler. Not that I'm not gambling in crypto. I am not gambling in gold and silver. I've started gold mines. I've started silver mines. But let me explain this. The reason I'm in Bitcoin is because it's the most established. It already has a network. It's got a head start on everybody. So this guy he won't touch Bitcoin because he's chasing the next hot thing. Now, he's too young to remember pets.com and Amazon. Okay, to remember Amazon was a struggling little company. They had no profits. Pets.com had the sock puppet. Everybody was jumping up and down because the sock puppet was on Super Bowl and all this stuff. So all of these yo-yos chasing the sock puppet. And Amazon was the biggest thing going, but it wasn't turning a profit because they were reinvesting. They were doing, I don't especially care for Amazon, but they're doing the right thing. So they struggled. They kept reinvesting. I've met Jeff Bezos, because when Rich Dad, Poor Dad made the list, he invited me to their openings. He's a good guy. I just don't like the politics, if you know what I mean. So Amazon was a better buy, but everybody bought pets.com. And so gold goes down and all you guys got their heads up their asses. That's the problem. They're not old like me and they don't have all the scars on their back to see the stupidity. They don't even know what the sock puppet was. And that's what happens. No basic financial education. Whether you're old or young, if you're stupid, you're stupid. I mean, just don't worry about it. The market will take care of you. And the difference is that in my generation, it was real estate. So I took real estate courses. I've never lost money in real estate. I've made fortunes in it. Do you know? I'm an insider because I do I don't touch REITs, REITs, real estate investment. I don't trust paper. I handle my own. I've started my own gold mine in China. First, the Chinese took it. That was a lesson. And I started my own silver mine in Argentina. So I understand mining. So all of these guys, my friends who are in crypto, now tell me they expect about 15,000 new ICOs. So this, basically all it takes is a brain and some electricity and a computer, and you can create your own crypto. So could Bitcoin be toast also? Possibly. In my world, as a professional investor, I'm in the acquisition phase. I've taken a position. I've taken a position in Bitcoin and Ethereum. Every time it looks like it's getting a little cheaper, I'll buy it. I'll buy it. I'll buy it. So I saw Bitcoin at 20,000, I think it was, and it dropped to 7, and I waited. And when it came to 9, I bought. So today I'm still in the money. Could some hodler coin take off? Yeah. Could there be another pets.com of crypto? Absolutely. But the difference is I'm in the acquisition. I've taken a position. I took a position in silver and gold. I have millions, not in this country, but I don't have any paper. I don't have any ETFs. I only take the real stuff. Because as I said, the Perth Mint can't deliver on silver. If a mint can't deliver on silver, who do you trust? And so with all of these young kids coming up going to invent the next Bitcoin, I don't doubt they will. I don't doubt one of those 10,000 new crypto may blow Bitcoin and Ethereum out of the water. And if that happens, I'll make my switch. But until then, I'm like I was with gold and silver. I'm in acquisition. I've taken a position. When I sell, it's called distribution. So as a professional, not a speculator, and I don't flip houses because I think that's really stupid because it's such high risk to flip a house. But today, everybody's flipping houses because the price of real estate is going through the roof. I was talking to the guy who cuts my hair. He says, "Oh, I finally bought a house. I offered 100,000 over the price." I'm going, "Holy moly!" So not only are stocks going up, real estate's going up. When this happens, the idiots jump in, and that's what's happening right now. So Bitcoin is the same way. So when it took a dip, I bought more. Can it go lower? Yes, I'll buy more. But there's one big difference between Bitcoin and Ethereum and real estate. Bitcoin and Ethereum are liquid. Means I can get out. If I realize that there's a new NFC, whatever they call them, or a new guy's going to take out Bitcoin, I can get out. But with real estate, the trouble with real estate, if it goes down, you're the skipper of the Titanic. You're going to ride that baby all the way down. So real estate is not liquid. At least stocks are liquid. But that poor bus driver dropped from liquid stocks into liquid bonds. He's got no place to go. So when I talked to him about possibly gold, silver, or crypto, no, he's an old guy, he's an old guy. So they're all related. So in this world of money, they're all related. It's like we're all related somehow on this whole planet. And so that's the world of money today. So that's real financial education. If you realize you cannot make a prediction, especially today, because nobody knows what's going to happen until it happens. The question is, are you prepared for what it happens? So I love Bitcoin because if I realize there's a hot new coin coming along, I can get out. But in real estate, I'm stuck in it. So those are some of the differences between investors, acquisition, taking a position, and distribution.